All right, businessman Jonah Mwaku is here with the business news. You're a businessman, right?
Exactly so.
In addition to being a reporter. Okay, so you bring us the business news.
Thank you very much, Israel. And in business, over 50 businesses in the capital have been shut down for breaching their tax obligations. This after Special Revenue Mobilization Task Force embarked on a door-to-door tax compliance exercise on Thursday morning in some retail markets. Sarah Josu of our businesses followed the task force and reports.
The affected businesses comprised 3 printing press companies and over 44 mobile phone shops at Tiptoe Lane, including Franco Trading Enterprise, whose offences included the issuance of unapproved receipts from their computers, no VAT invoices, and tax evasions. The businesses had defaulted in tax payment to the tune of 441,000 Ghana cedis in total between 2013 and 2015. The managing directors of Skyco Printing Press in Adabraka and Germain's Printing Press in Kokomlemle were arrested for doctoring the serial numbers on their tax clearance certificates and thereby evading taxes. Director of the task force and Chief Revenue Officer at the Ghana Revenue Authority, Theophilus Gaskin, seized the opportunity to caution operators engaging rental service companies to also honor their rent taxes to forestall such actions against them.
Rent income has shown itself to be very prominent. And we want to send out a word of caution to all landlords and landladies, those who have leased their buildings, those who have rented their properties to tenants, both residential and non-residential. They must come out and voluntarily declare their rental incomes for tax purposes. So far, the task force has been able to collect within 7 weeks of rent tax campaign 4.279 million Ghana cedis. 4.279 million Ghana cedis. This had been collected within a period of 7 weeks. The exercise is still continuing, and we are sure that rent income will now become a dominant tax type in the shortest possible time.
The exercise forms part of the initiatives by the Ghana Revenue Authority to get tax defaulting businesses to honor their obligation to the benefit of the economy. The affected companies would have to establish their tax positions and pay the differences as well as the penalty required before they can resume work. For Joy Business, Sarah Josu.
Still on revenues, and revenue losses from the country's exports are now expected to be minimized following the introduction of a new monitoring system for the processing of documentation at the port. The automated system to be deployed on 1st July was launched at the Forum for Exporters and other stakeholders in the export sector on the initiative. Sheila Tamaklo was there for Joy Business and reports.
The new system is developed by the electronic service providers at the country's ports, GCNet, in collaboration with the Bank of Ghana. It involves automation of export documentation whilst ensuring better coordination among government agencies at the ports. The product development manager of GCNet, Carl Saki, tells Joy Business the system will track export proceeds to ensure that foreign exchange earned from exports are repatriated to Ghana.
The system that we've launched today, basically we're showcasing to exporters and stakeholders, is basically to replace the manual way of doing exports and remittances. Now, what this is going to enable the central bank and government to be able to do is to be able to, at the click of a button, now the system is actually automated, and so if I'm exporting, I need to state the bank that is going to receive the proceeds of my, so after 90 days, 30 days, whichever period, and the bank will have to confirm. So immediately the bank doesn't confirm, the system automatically alerts the central bank that I have exported goods worth $1 million, gold worth $1 million for whatever amount. The proceeds have not come in, and the central bank is going to be able to follow up on it. Now, secondly, what it's also going to do is to prevent you from doing exports. And so if you don't repatriate, the proceeds are not repatriated, you can't do subsequent exports and you'll be held liable. And so basically it's just trying to mobilize the forex reserves of the country, monies that will go out of, we sell goods and services are exported, and the monies don't come in. The monies are going to come in. It's going to help government be able to do its planning to be able to improve revenue mobilization.
The Bank of Ghana is also hopeful the system will help address the depreciating Ghana cedi by blocking leakages in foreign exchange from export proceeds. Some stakeholders also hailed the initiative as timely for their respective operations.
This is something that we've been waiting for so long, right? Because most of our competitors are Indians. They come into the system and they use the swapping type of currency. Let me give you cedi, dollar in Dubai, you give me cedi here. And they compete in the field with us. You understand? So at the end of the day, it becomes very uncomfortable for us. So we are very happy it is coming, honestly.
We are asking the dealing banks, I'm talking of the banks who are the customer, who have the exporters as their customers, to receive the exports in foreign currency and then deal with the exporters themselves. So it's a way of giving forex to the commercial banks.
The system, to be implemented from July 1st, will apply to both traditional and non-traditional exports. It gives meaning to a notice issued by the Central Bank on May 30th this year on the amendments to requirements for surrender and repatriation of export receipts.
The power crisis still remains a threat to Ghana's economic growth, but should end soon with remedial steps taken so far. That's according to the Oxford Business Group, a global publisher and consultancy firm that specializes in producing investment and economic reports on more than 30 countries. This was revealed at a roundtable discussion organized by the group in Accra today to review the performance of Ghana's economy in the past 5 years. The managing editor of Africa Report, Tashima, spoke to Joy Business.
Ghana that we're now covering for our 2017 report is miles away from what the Ghana was when we first arrived in 2010. But it hasn't been smooth and it hasn't been perfect. And we know that because of depreciation and because of doomsor. The doomsor is obviously a big concern for industrial producers and for households. So whether you're a big company or whether you're a one-person household in the countryside, it's a problem. And it's expensive. It's an expensive problem. And addressing that sustainably is going to take a long time. It means investing in big projects. It means building new power plants, improving transmission and distribution grids. And that's not something that can be done overnight. But I think what's important is that you're seeing a lot of the steps moving in the right direction. So the government has already highlighted some short-term solutions with the power barges, for example, coming and providing temporary solutions to the shortage of electricity. If that is successful, then that opens a door to a whole range of new investments, not only from local investors, but also from foreign investors to help build up the power sector, to help improve supply.
Okay, now time to do the market. Look at how the currencies, the commodity and the stock market did perform today on the market. But unfortunately, the Ghana Stock Exchange actually did not record that significant performance or that impressive performance, as a total volume of 42,631 was recorded on the exchange today at a value of about 145,327. That activity level brought market capitalization marginally lower to almost about 54,328.61 million Ghana cedis, as against 54,308.84 million Ghana cedis. Quite some, not significant though, but of course some gradual depreciation there on the market value, and that brought the composite index marginally up to almost about 3.63 points to close the year around 11.20. But the financial index, which measures the total performance of the financial equities listed on the Ghana Stock Exchange, declined marginally by almost about 0.29 points, and currently reigning around 14.19 in the negative region. Still finding it very difficult to recover itself. I'm talking about the Ghana Stock Exchange. The only two equities really moved the market today. I'm talking about Farm Milk, which recorded a return of 18 pesos per share to its investors as it closed the market at 8 Ghana cedis per share. And Standard Chartered Bank unfortunately lost 1 Ghana to close or to open the market tomorrow at 14 Ghana cedis 25 cents. Now let's move on to the commodities and look at how the commodity market did fare on the American Mercantile Exchange as crude keeps losing value. Just about last week, just about 5 days ago, crude was almost about $52 per barrel. Now currently trading at $47.58 after losing $1.39, and gold currently also losing $8.51 and trading at $1,258.58 cents. But for cocoa, the biggest and the heaviest loser of the day, lost $76 and trading at $3,040 per ton. So that's exactly how it is. And we move on to the currency to look at how the Ghana cedi did fare against the top 5 major trading currencies here in Ghana. The cedi lost against the US dollar, gained against the British pound, lost against the euro, lost against the Chinese yuan, and also against the CFA franc. So tomorrow the Ghana cedi will open at 3 Ghana cedis 90, British pound 5 Ghana cedi 53, and 4 Ghana cedis 38 for the euro. That's exactly how it is. So the market has not been that good today. We hope tomorrow, being a Friday, the market is going to close positively to every investor in that particular market. So that'll be it for the market, and that'll be it for business here on Prime. My name is John Kojo Amwakon. We'll be right back again tomorrow, but the news continues.